I'm Jeff Zimmerman, CEO of Fortin Home, and welcome back to Builder's View. Today we're talking about something every real estate investor should understand. Who is allowed to invest in private real estate deals and why? You've probably heard terms like accredited investor, 506B, 506C, general solicitation, verification requirements, but most investors don't actually know what these rules really mean and how they shape the opportunity available to them. This episode is a simple, clear breakdown of how the SEC divides investors into different categories and how private offerings are legally structured. This is educational only, not a pitch, not an offer to sell securities. Let's start with the foundation. The SEC, which is the Securities and Exchange Commission, created a term, accredited investor, to identify people who have higher income, higher net worth, or special professional credentials. The idea is simple. If you meet certain financial thresholds, the SEC assumes that you can evaluate higher risk private investments. As of today, there are three main ways to qualify. Income test. You made $200,000 per year as an individual for the last 2 years, or $300,000 plus combined income with a spouse or a partner, and reasonably expect the same this year. Number 2 is the net worth test. You have a net worth of $1 million plus, excluding your primary residence. And then number 3 is professional credentials. You hold certain licensures like Series 7, Series 65, Series 82, or you work in a specific investment role defined by the SEC. That's it. If you meet these, you are an accredited investor. Accreditation matters because private investments like private equity funds, private debt funds, and many other real estate offerings do not require the same public disclosures as publicly traded companies do. The SEC allows operators to raise capital privately, but only from people who understand the risks, can handle the financial losses, and have the sophistication or resources to make informed decisions. It's not about excluding people. It's about investor protection. These rules are why different types of offerings, like 506B and 506C, have different advertising rules and eligibility requirements. Let's break down the first type. Rule 506B under Regulation D. A 506B offering allows the issuer, the investment sponsor, to raise unlimited capital from accredited investors and up to 35 non-accredited but sophisticated investors. But, and this is the key point, the sponsor cannot publicly advertise or solicit the offering. That means no social media posts, no YouTube discussions, no website promotion, no email campaigns to the public. Everything must be relationship driven. This is why you often hear the phrase 506B is friends and family offerings. It is built around existing relationships. You can talk privately with investors you already know, not the general public. Advantages of 506B are broader pool of investors, including some non-accredited, no formal third-party verification required, relationship-based trust limitations, no public marketing, must know the investor beforehand, must document the relationship history. It's one of the most widely used structures in the real estate. Now let's talk about the second major category, which is 506C. 506C offerings are very different. 506C allows sponsors to publicly advertise the offering, meaning social media, YouTube, websites, newsletters, public webinars, all of these are allowed. But there's a trade-off. Only accredited investors are allowed to invest, and the accreditation must be verified, not self-reported. That means investors must provide verification through a CPA, an attorney, a registered investment advisor, or a third-party service like Parallel Markets or Verify Investor. Self-certification is not allowed. And some of the advantages of the 506C is that you can market publicly to a larger potential audience and faster capital raising. The limitations, though, you can only have accredited investors only, verification is required, more compliance and documentation. Most modern real estate funds use 506C because education and marketing is allowed, as long as only accredited investors participate. Let's recap with a simple side-by-side. 506B, no public advertising, must have pre-existing relationship. You can include up to 35 non-accredited investors. Accreditation is self-reported. Most relationship-driven offerings use 506B. Now for 506C, public advertising is allowed, accredited investors only. Accreditation must be verified, perfect for platforms, podcasts, and larger scale raises, but both structures are legally and widely used. The choice depends on the business model and the investor base. Here's a clean breakdown. If you're an accredited investor, you can invest in 506B offerings, 506C offerings, most private funds, private equity, private debt, and many venture and real estate vehicles. Your options are wide open. If you're not an accredited investor, you can invest in 506B offerings only if you have a pre-existing relationship and are considered sophisticated. Certain crowdfunding offerings, Reg CF, and some Reg A offerings, but you cannot invest in 506C offerings. These rules matter because they determine who operators like us are legally allowed to accept capital from. These SEC frameworks exist to protect investors, reduce fraud, ensure people understand the risks, and create a clear legal framework for private capital raising. Private markets are powerful, flexible, and entrepreneurial, but they come with real responsibility for both the investor and the operator. Understanding these rules allows you to invest with confidence. Today we covered what an accredited investor is, what a 506B offering is, what a 506C offering is, who can invest in each, and why these rules exist in the first place. If you want more educational content on debt, equity, capital stacks, or accredited investor rules, visit fortinhome.com, or you can also go to sec.com. This episode is strictly educational. It is not an offer to sell or a solicitation to buy any securities. Any actual offering is made only through formal documentation and only to eligible investors. I'm Jeff Zimmerman. This is Builder's View, where we break down how real estate actually works so you can make informed decisions.